Welcome back to the next video. If you watched the previous video, which I highly recommend, you will remember that we decided to take a short. I'm going to move to the chart immediately so you can follow on with this. I've rewound again to the exact position that we took a short as it was coming down this channel here, and we assumed that if it broke down beneath here we would short it, and when we did, it shot up. And that's because we didn't understand about market structure, which is what the last video goes into. So we learned that really, if you're a beginning trader, you should certainly look on the higher time frames, the 1 day chart for the market structure, and you should trade with the trend. So when you move to a lower time frame, which when you go say to the 4 hour, you can see that Bitcoin at this point is in a down channel, still in an uptrend, then you should be going long, not short. But when do you go long? So this is when I introduce you to a new acronym called BOS, which stands for break of structure. What we're wanting it to do here, if I just get my little pen, is to come down and start breaking up this here. So that instead of getting lower highs and lower lows, we start to get higher highs and higher lows. And that's what we're waiting for. Now, I'm going to put on an indicator, which is by a company called Lux Algo. They do premium indicators, but they do many really great free ones as well. I'd highly recommend you checking them out to be used on TradingView. This is called Smart Money Concepts, and I've got it set up only to display the break of structures, or BOS as I shall refer to them from here on in. So here we are, we're in this down channel, and what we're really waiting for is a break of structure back to the upside to go with the trend. So I've slowed back the replay, we're on the 4 hour chart. Let's watch and let's see what happens. We have a break of structure. We have a break of structure here. So now what we're after is a higher low. So what I would tend to do at this point is start putting on a kind of long position somewhere here and then wait. Literally, I don't want it to go beneath there, looking at risk reward, but I wait. I want it to come into this buy zone here. I'm going to put an entry line here, and then I want it to turn up, and then I will go in. So let's just let it play. And there it came into our buy zone. So let's assume at this point we've taken the trade. We are in the trade because we have this break of structure. Let's let it play. Another break of structure, which is very promising. But right now, this is playing out really, really well. We're trading with the trend. Let me stop that. We're trading with the trend, and we're allowing the break of structure to guide us to when we should go in. We get that higher high break of structure. We wait for the higher low and the reversal, and then we can take the trade. So that's it for this particular lesson. However, I use break of structure impulse flow alongside something else, which is the next acronym in the next video that we're going to learn. So come to that next one. But for now, my name's Andy. Please like, subscribe, share, all the usual stuff. It would be really useful. Thank you very much. Bye-bye.